The Rothschilds control billions. The Rockefellers shaped entire industries. The Vanderbilts built empires. And legally, they own absolutely nothing. Not their mansions, not their companies, not even their private jets. This isn't some conspiracy theory. It's the smartest wealth protection strategy ever invented, and you're about to understand exactly how it works. John D. Rockefeller's grandson said it best: own nothing and control everything. Sounds backwards, right? You spend your whole life building wealth, accumulating assets, working your butt off to actually own something, and then someone tells you the richest people on earth deliberately own nothing? What kind of sense does that make? Here's what they figured out that most people never will. What you don't own can't be taken from you. Think about that for a second. If your name isn't on the deed, if you're not the legal owner on paper, then when someone comes after you, and trust me, someone always comes after you when you have money, they hit a brick wall. You remain in control, you still benefit, you still make every decision, but legally, you're untouchable. Let me paint you a picture of how bad this can get if you do own everything. You're a landlord. You've got 3 rental properties all in your name because why wouldn't they be? You worked hard for those. Then one day, a contractor falls off a ladder at one property. He sues. Your insurance covers $2 million, but the jury awards him $4 million because his lawyer made them cry. Guess what happens to your other 2 properties? Gone. Your personal home? Gone. Your retirement account? Lawyers are coming for that too. One accident, one lawsuit. Everything you built over 20 years evaporated. Now here's where it gets interesting. Insurance companies love telling you that you're fully protected. They sell you these massive policies and make you feel invincible. But here's what they don't advertise. When claims exceed policy limits, which happens way more often than anyone wants to admit, attorneys start digging. They pull public records. They search property databases. They find every single thing with your name on it. Personal ownership creates a treasure map for litigation attorneys, and they've gotten really good at reading maps. The wealthy families figured this out generations ago. They separated ownership from control. So how does this actually work? Let's break it down because this is where most people's brains start hurting. The ultra-wealthy use layers. Picture an onion, except instead of making you cry, each layer protects your wealth. First layer, the limited liability company. Every single property goes into its own LLC, not multiple properties in one LLC. That's amateur hour. One property, one LLC. Why? Because if that contractor falls at property number 1, the lawsuit can only touch what's inside that specific LLC. The other properties are in completely different legal entities. The lawsuit hits a wall and stops. But wait, who owns those LLCs? This is where it gets clever. Second layer, a holding company. Another LLC that owns all your property LLCs. Now there's another barrier between you and your assets. Someone would have to pierce through 2 separate legal entities to get to anything valuable. Third layer, the trust. The holding company isn't owned by you. It's owned by a trust. And trusts are private documents. Nobody can look up who benefits from a trust. Nobody can see what's inside it. It's a black box that happens to control everything you've built. Fourth layer, sometimes they throw in a corporation, usually a subchapter S or C Corp, just for extra protection. At this point, you've got so many legal barriers that most attorneys take one look at the structure and advise their clients to settle for pennies on the dollar. It's just not worth the legal fees to chase ghosts through 4 different legal entities. You're probably thinking this sounds complicated. It is. That's the point. Let me show you how insane this can get when you're really wealthy. There's this family, I'm not naming names, that set up a closed-loop system that would make your head spin. They've got a family trust that owns a holding LLC. That LLC invests in oil fields. Raw extraction, dirty work, big money. The profits from those oil fields buy shares in a shipping company. Not just any shipping company, the one that transports their oil. So they're essentially paying themselves to move their own product. Profits from shipping flow into a refinery that they also control through another subsidiary. The refinery turns crude oil into gasoline. That gasoline gets sold at gas stations owned by yet another LLC under the same umbrella. And because they're forward-thinking, the profits from those gas stations help purchase highway hotels and travel centers. Drivers fuel up, stay overnight, and every dollar flows back into the trust. which reinvests into more oil fields. It's a perfect circle. And here's the kicker. If someone sues one of those gas stations, they can't touch the oil fields. They can't reach the shipping company. They can't get to the refinery. Each piece is its own separate legal entity. The family members themselves, they own exactly zero of it on paper. They're just trustees, board members, managers. But they control every single decision. That's the game. Now you might be wondering about privacy. Why do the rich care so much about keeping their ownership secret? After all, if everything's legal and above board, what's the problem? 3 reasons. First, when people know you're wealthy, you become a target. Frivolous lawsuits multiply. Everyone suddenly remembers that time they slipped on your property, or claims you owe them money from some deal years ago. The less people know about what you own, the safer you are. Second, kidnappers and criminals specifically target families where they can verify wealth. Sounds dramatic, but it's real. High-profile entrepreneurs and business owners use these structures specifically to make it impossible for bad actors to figure out their net worth or locate their assets. Third, business strategy. If your competitors don't know what you own or control, they can't strategize against you effectively. You can acquire companies, invest in properties, and make moves without tipping your hand. But here's what nobody tells you about this strategy, and it's probably the most important thing you'll hear. Timing matters more than anything else. You can't wait until trouble shows up. Let's say you're going through a messy divorce and suddenly decide to transfer all your assets into a trust the week before filing. Guess what that's called? Fraudulent conveyance. The court will unwind everything you just did and hand your assets over anyway. Same thing if you're about to declare bankruptcy or you know a lawsuit is coming. Courts aren't stupid. They see right through last-minute asset protection schemes. This has to be set up years in advance, when everything's calm, when there's no threat on the horizon. That's when you build the fortress, not when the enemy's already at the gate. Asset protection is proactive, never reactive. The wealthy understand this instinctively. They structure everything correctly from day one, long before they need protection, because they know that one day, maybe 10 years from now, maybe 20, someone will come after what they've built. And when that day comes, the walls will already be standing. So the question becomes, what happens when you need to actually use these structures? How do you actually live day to day when you technically own nothing? You still use the assets, still make decisions, still benefit from everything. The difference is the legal firewall between you and liability. Take someone who owns rental properties. They don't hold the deeds personally. Each property sits in its own LLC. That LLC is owned by a holding company. The holding company is owned by a trust. They're the trustee, so they make all the decisions. They collect the rent, manage the properties, reinvest the profits. But if a tenant sues because they slipped on ice, the lawsuit hits the LLC, not them personally. The plaintiff can go after that one property, maybe, but they can't touch the other properties. They can't reach into personal bank accounts. They can't seize the family home. The structure creates walls between each asset and between the assets and the individual. Now let's talk about the tax side, because this is where things get interesting. When you die, everything you own gets hit with estate tax. Currently, you can pass about $13 million tax-free if you're single, double that if you're married. Anything above that threshold? The government takes 40%. 40%. On a $50 million estate, that's $20 million gone. Your kids inherit $30 million instead of $50. But here's what the wealthy figured out. Assets inside certain trusts don't count toward your taxable estate. You move everything into an irrevocable trust while you're alive. You're no longer the legal owner, the trust is. But you can still benefit from those assets through distributions, and your kids can too. When you die, the IRS looks at what's in your name, nothing. Zero estate tax. The full $50 million passes to the next generation intact. Then when your kids die, same thing. Nothing in their names either. The assets stay in the trust, passing to your grandkids without getting taxed again. This is called a dynasty trust, and it can last for generations. Some states allow them to run for hundreds of years. Your great-great-great-grandchildren will benefit from wealth that never gets touched by estate taxes because it never technically changes hands. It just stays in the trust, compounding forever. There's a deadline on this, by the way. Right now, that $13 million exemption is historically high. On January 1st, 2026, it gets cut in half. which means if you have significant wealth and you haven't moved it into a trust yet, you've got about a year to take advantage of this window. After that, the amount you can transfer tax-free drops to roughly 6 or 7 million. The wealthy are scrambling to lock in these structures before the rules change. But this only works if you're transparent with the IRS. That's the part people misunderstand. This isn't about hiding assets or evading taxes. Everything gets reported. The IRS knows about the trust. They know about the LLCs. They know about the offshore accounts if you have them. The strategy isn't secrecy from the government. It's legal separation. You're using structures that the tax code explicitly allows. You're playing by the rules, just playing a completely different game than most people even know exists. Speaking of offshore, let's address that because it sounds shady until you understand what's actually happening. Some wealthy families use foreign trusts, particularly in places like the Cook Islands. Why? Because U.S. courts have no jurisdiction there. If someone sues you and wins a judgment in America, they still have to go to the Cook Islands to enforce it. They have to hire lawyers there. They have to prove their case again under Cook Islands law. And Cook Islands law says the plaintiff must prove beyond a reasonable doubt that you set up the trust specifically to defraud them. That's almost impossible to prove if the trust was established years before any dispute. Most plaintiffs give up. It's not worth the cost. They'll settle for pennies on the dollar rather than fight an international legal battle. The trust also has a 2-year statute of limitations. If the assets have been in the trust for 2 years, no fraudulent conveyance claims can be made, period. It's a fortress that's nearly impossible to breach. Is this sketchy? Not if you report it correctly. You still pay U.S. taxes on any income generated. You still file all the required forms. The offshore structure is purely for asset protection, not tax evasion. The moment you try to hide income or skip reporting requirements, you're committing a crime. The IRS has information sharing agreements with most countries now. They'll find out. The wealthy who do this right are completely above board. They're just using geography as another layer of protection. Even everyday assets work differently when you think like the rich. They don't own cars outright, they lease them through an LLC. Why? Because if they cause an accident, the liability hits the company, not them personally. They don't own vacation homes in their name. Those properties sit in separate LLCs too. If someone gets hurt at the beach house, the lawsuit targets that specific entity. Private jets, yachts, art collections, everything lives inside its own protective structure. Elon Musk takes this even further. He borrows against his Tesla shares instead of selling them. When you sell stock, you pay capital gains tax. Could be 20% or more depending on your bracket. But when you borrow against stock, there's no tax. The bank gives you cash using the shares as collateral. You get liquidity without triggering a taxable event. And if the stock appreciates, you can borrow even more. Musk has used this strategy to fund other ventures while keeping his Tesla position intact. He controls billions in assets while owning relatively little outright. It's leverage and control without ownership. For people just starting out, the principles scale down. You don't need billions to benefit from this. If you own even 2 rental properties, you should have each in a separate LLC, costs a few $100s per entity. If you're building any kind of wealth, you should have a trust drafted. That's a few $1,000s up front, but protects everything you'll build over the next 30 years. You should separate your personal assets from your business assets immediately. Mixing them is financial suicide because one lawsuit can wipe out everything. The real tragedy is how many people build wealth the hard way, working for decades, only to lose it all in a single lawsuit because they never structured anything correctly. They thought insurance was enough. They thought being careful was enough. But accidents happen. People get injured. Lawsuits get filed. And when the damages exceed your policy limits, attorneys go hunting for anything with your name on it. If your name is on the deed to your house, your rental properties, your business, your investment accounts, all of it becomes fair game. What the wealthy understand is that wealth isn't just about accumulation. It's about protection. The game isn't won by making the most money. It's won by keeping what you make. And you keep it by making sure that legally, on paper, you own nothing. But you control everything. That's how generational wealth actually survives. That's how dynasties are built. Not through secrecy or deception, but through structure. Legal walls that stand between what you've built and everyone who wants a piece of it. Now you understand why the Rockefellers, the Rothschilds, and every major dynasty operates this way. It's not about being shady. It's not about cheating the system. It's about understanding that the system has rules, and those rules allow you to protect what you've built if you're smart enough to use them. Most people spend their entire lives accumulating wealth with zero thought to protection. They think working hard and being careful is enough. Then one bad day, One accident, one lawsuit, and decades of work vanish because their name was on everything. The wealthy don't make that mistake. They build the fortress first, then fill it with treasure. You don't need $1 billion to start thinking this way. If you own property, run a business, or have anything worth protecting, you need structure. Not someday, not when you're richer, right now. Because the lawsuit doesn't care how much you have. It just cares what it can take. And if your name is on it, it can take everything. That's the real secret. Own nothing, control everything, and make sure the walls are standing long before anyone comes knocking.